Well, what a wild time for markets. But have we found a bottom? So hi there everyone, welcome to the Traders Circle weekly market update. It is Tuesday the 8th of April 2025, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. I thought we'd start with some fake news. Overnight we saw US markets open extremely weak. They were down very strongly after some comments from Fed Chair Jerome Powell on Friday. He basically came out and said that the tariffs would lead to a potential recession or had the potential to cause a recession. He also said that they could cause inflation, meaning that the Fed might not be there to cut interest rates if we do see an economic downturn, basically suggesting that the Fed put is not as strong as the market was hoping. Overnight, US markets did open extremely weak. They were down about 4 to 5%, selling across the board. They dragged everything else down with them, and people were wondering if the selling was ever going to stop. However, partway through the overnight session, we saw some fake news come out. That was this tweet. It was tweeted by a Twitter handle known as Walter Bloomberg, perhaps the Bloomberg name there causing people to believe that it was true. And he basically said that, as you can see, Trump was considering a pause on the tariffs. Now that led to a huge rebound in markets. Markets pushed strongly into the green. They were up, a couple of percentage points in the US, and everyone thought, that tariff selling was over. The big drop was over. We were going to see a rebound. Things were going to head back up. However, like I said, it turned out to be fake news. Trump came out and basically said, they're not going to pause tariffs. He said, they're open to negotiations, but he's been saying that the whole time. It's very interesting because after it was debunked, markets still held fairly flat. They gave up their gains, but they closed pretty much where they closed on Friday. They didn't close anywhere near the lows they saw earlier in the session. Now, why might that be? The news that caused them to rebound was proved to be fake. Why would they hold fairly flat? And indeed, at the time of recording, US futures are up strongly. It's very hard to know, why. Why is the market happy to buy up on this fake news? And I think perhaps the only reasonable explanation I can see is it basically shows to other investors that there are plenty of investors on the sidelines. There's plenty of money sitting there ready to jump in when a bottom is found. So, basically, the fact that it did push up was enough for many buyers to say, okay, well, there will be buying eventually. These are lower prices than we were getting at any point in the last 6 months. Maybe it is good enough to sort of start dipping our toes in the water and buying a little bit here. I do want to caveat that and say that tariffs are extremely negative for the economy. They're extremely negative for share prices. They're extremely negative for company profits. You can go and read sort of many different commentaries on what they might do to the economy. I've been saying for some time, I think there's a fair chance they trigger a US recession. I think that's a high likelihood now. Second half of this year, maybe early next year, we will see a US recession. Additionally, they're going to lead to price increases. Just as Jerome Powell said, we could see a rebound in inflation. He said initially that it might be transitory. On Friday, he acknowledged that it might not be transitory. Regardless, it is going to be hard for the Fed to cut rates if inflation pushes up, even if the economy starts to slow down. So the tariffs are extremely negative for the market, and despite the overnight buying, I would suggest that there's no guarantee we're out of the woods yet. If anything, I think we could set a lower peak and then see a resumption in selling and perhaps a lower trough than Monday night's low. So the tariffs are still there. They're still very negative. They're still incredibly stupid in how they're being implemented. Trump basically came out and said initially that they were reciprocal, i.e., he's tariffing people who are tariffing them. And it turns out, no, he's just basically tariffing people who have a trade deficit with the US. I just want to illustrate that is, it is extremely stupid because it's like saying, I spent more at my hairdresser than my hairdresser spent with me, so, I'm basically going to put a tax on myself going to the hairdresser. It basically does not make very much sense, and you'd be laughed out of a economics forum for suggesting a tariff on people you run a trade deficit with. It certainly doesn't take into account other things like the financial account balances, for example. And I think it is a real mark against the US administration that they've done it that way. And so, yeah, like I said, while there is a little bit of optimism over the last sort of 24 hours, I'm not sure it's going to last overly long. We could see a lower peak, and then I think there's every chance we see a lower trough. And what about Australia? What does this mean for Australia? Well, we've seen commodity prices come off. That definitely hurts some sectors of our market. We saw oil hit a 4-year low. Iron ore prices have fallen fairly strongly. Copper prices are off, I think, close to 10% from their peak. A lot of other commodities have moved lower. But outside of the commodity space, I'm not sure it's going to have too much of an effect on our economy. Now, there's a difference between the share market and the economy. Our share market was brought up to extremely overvalued levels, and that was based on money printing in the US. That was based on US share market rallies. And I would suggest that if, our market is still fairly expensive. It's not the extreme levels that it was, but even at current prices after 15% fall, our market is still fairly heavily priced compared to its averages. If US markets do rebound, we will rebound as well. Even if US markets stabilize, we'll probably stabilize here as well. For our economy, though, our economy continues to tick along, and I would suggest it's unlikely that we'll see too severe an impact if there is an economic downturn in the US, but our market will show a fairly severe impact. The other thing I wanted to say is we've seen bets on Australian rate cuts start to increase. So our market is now, or our financial markets are now predicting up to 5 RBA rate cuts this year. And that's a good thing for our economy. It's a good thing for our market. And you would assume that we would see some optimism around that. But the reality is that our market is just following what's happening in the US at the moment. So if we have a quick look at the charts for this week, we can basically see the reversal in the US S&P 500 overnight. They opened extremely weak. They pushed up very strongly based on that fake news tweet, and they closed fairly flat. If they do see a continued rebound, I think the first target would be about 5,300. That was the gap level they dropped to on Friday's open. And if they can exceed that level, then I think we're looking at the next gap level, 5,400. If there's a meaningful rebound, I think they'll struggle to go past this potential downtrend line. And so, that might intersect one of those gap levels, or it might be as high as 5,500 if they jump very strongly in the short term. On the resumption of selling, we have to look at the overnight lows, 48.50, something like that. But I wouldn't be surprised if there is a low beyond that level at some point in this downturn. If we have a quick look at the chart of the Australian market for this week, we can see that we've had a very strong rebound today, and it follows the US move overnight. They were strongly lower, they came back to flat, and then their futures are up strongly at the moment. And so we've rebounded based on that. We've seen a very strong session today. That does indicate we could push up to our next level if the US market has a positive session tonight. For me, I see our next level at roughly 76.26, and that was the low back in August. It's also, partway through the gap level that we gapped through on open on Monday. If we can breach that, there's our downtrend line not too far away, and then the previous support level, which may act as resistance, and that's just under 77.50. Overall, unless something on the tariff front really changes, I do think we're going to see the lower peaks and troughs, especially if we start to see economic data weaken, especially if we see data point to a US recession, or we see US inflation start to lift. So yeah, look, despite the short-term optimism, we could see a couple of days in it. I don't think it's going to last unless there is a resolution to the tariff question. So I will wrap it up there for this week, guys. Hopefully you guys enjoyed. If you did, give us some love by clicking subscribe, clicking the like button, and we'll see you guys next time.